Lishonile Masatla Mahla nginibingelele nginemukele ehlelweni lwethu i-Business Forum. Ligama lami ngikhanyisile Mabuza kanti ke lolu hlelo la sibuka khona tindzaba temabhizinisi, sibuka tinkampani, sibuka indzaba temnotfo netemafa. Lamuhla silapha ke ezulwini enhloko-hhovisi elibhange le-First National Bank lapho ke batowuthula khona bona ke ama-results abo etimali eminyakeni wabo labawuphethe ngenyanga yenhlaba. Lekungiyo ke i-annual financial results presentation. I-presentation ke lena yendiwa nguye ke umphathi waleli bhange umnumzane Dennis Mbingo lochaze kuningi baphindze wacathanisa iminyaka lelishumi leyendlulile kodwa ke ngingakanzi kabanti sitawulalela nje Maswati lamahle siphindze sive futhi ngaloke lushintsho loselukhona lo-CMA lokusho ukuthi uma uthumela imali ngaphandle kwakuleli sekutawuthatha ke lichi futhi ke sekukhona lapha kushintshe khona kodwa ke konke sidakuva khona la ngekhathi ehlelweni asilifokotele.
Welcoming the media. We take you very seriously. Moments like today, for us, you can flip to the next slide, are quite important, especially because during the course of this year, we are expecting in April 2025 that we'll be celebrating 30 years in the country. That's a big development for FNB Eswatini, and it's not something that we take lightly. So thank you for being here as part of that celebration. I'm saying this morning is actually quite important because it is opportunities for accountability. We take accountability very seriously as part of the FNB and First Friend leadership model. This accountability between us and stakeholders and creating these moments where we can connect is a critical part of how we run the business. It also provides an opportunity for us to educate around where FNB is, where we see the country, where we see developments that impact the industry and beyond, and also allows us to take questions and criticisms where that is warranted. So if you feel you need to ask questions or engage, we're very comfortable with engagement. I think that point must be well made. It's ingrained in how we do things. All right, can I get into a bit of the numbers? I will talk a bit around how we read the operating environment. I won't go into too much detail. We can cover what you may think we have missed in the question and answer session. But essentially, we've been very lucky this year that we've operated in an environment that has demonstrated improving stability. And whilst there are concerns around the operating environment and the economy, those questions are just as global as they are local. We've had relative stability, but there's just a few things that we wanted to flesh. So GDP especially has been positive since the pandemic. We see a lot of material going out in the media around where our GDP growth is. It's an important number for a developing economy that you always show progressive growth when it comes to GDP, because that is how employment is created, that is how opportunities are created. And Eswatini in the last couple of years has sustained positive numbers. We do think, though, that there is an opportunity for us as a collective to try and help get these numbers higher, because it is not going to be an easy road to solve for all of the social challenges that we have, and I'll talk to one or two later. We struggled with inflation in prior years, again due to global developments. We've had relative stability, and I say this with consciousness because when we say inflation is low, it's not low for everyone. It depends on where you are placed in the economic value chain. We are also quite cognizant of the fact that as much as we think inflation has sort of recovered from what we thought was bad coming out of the pandemic environment, the slowing down of price increases is also at the back of fairly high increases in the past 2 years. So people don't necessarily look at inflation data when they decide if they can afford stuff. They are looking at the price of bread and the price of milk and the price of groceries. So it's a good number, a much better number than I think what we've shown in previous financial years. But we appreciate the fact that it's still a challenged environment in terms of affordability. So we're not blind to that. But even with that background, we've had a fairly stable interest rate environment. I think it is key as part of just painting a picture on where the economy stands, that we've had, it was important for us for the country to go through successful national elections. We are watching and listening around the continuity from those elections to what will policy look like going forward. There's been a lot that's been said through the media. We listen to a lot to what our policymakers say, but we are still looking for that cohesive um, um, policy line that gives very clear direction around where the country is going. At this point, there are no particular discomforts. It's a question of just getting better understanding as the government stabilizes. We do carry concerns around global stability, especially around conflicts. Um, I think one point one should make is, I think in previous days, global conflicts could almost be localized at certain instances. That's no longer the case. When there's a disruption anywhere in the world, our immediate response, if it happens at night, our immediate response is to check what's happening to financial services in our part of the world, what's happening to the policy environment, what's happening to interest rates, what's the likelihood of impact in terms of inflation and the like. So we, as connected as we've become, the more connected we have become, conflict can no longer be localized. A small fire somewhere around the world burns right through. There's a conflict in the Middle East. We stressed so much that we met some of our bigger clients when it started and just checked, are your supply value chains protected? Is there any engagement we need to have around assistance you might need in routing anything that is imported from any part of the world that is to be routed through the Middle East? So as much as we might be in a small part of the continent in Southern Africa, global conflict is a material impact on results. We are watching again the El Nino story and are trying to set up infrastructure within the bank to become a lot more climate sensitive and to develop an ability to forecast the impact so that we can decide where to lend, how to lend, and how to support. And then we're also appreciative that at least regionally, we've had relatively successful elections, and that fits into the stability story. I'm happy to take questions, by the way, as I've said, when we get to the end of the presentation. Having seen operational stability, if we can flip on to the next slide, there are concerns perhaps that are emerging with a lot of these changes. As change happens, opportunities and gaps do happen do show up that people do exploit. So the first one that we wanted to highlight this morning is that globalization and regional integration is a theme and a very welcome theme for us in the banking sector. But you think when you look at what's happening regionally and globally, there's probably there's multiple conversations that are necessary for better alignment of all of our countries' intent, regional policy frameworks, because you can see that as much as we talk globalization, we talk regional integration, the individual acts of different countries, some of them tend to challenge that. And you're seeing it in the policy framework in some instances. So we do think there's an opportunity for a cohesive story coming out of, especially for Africa, what do we mean by integration? What do we mean about all of the trade arrangements that we have to simplify the movement of the right skills, to simplify the movement of capital across our regions? And that fits into the regional payments landscape. We've had a lot of questions, especially from the media and our customers, around what's happening with payments. There are good changes that regional regulators have agreed on to help simplify the movement of flows cross borders, but significantly to help protect the movement of flows across borders. So there is a remodeling of that reality, and we are asking customers to bear with us as we go through the process. It is uncomfortable. We have given our input where we can, but it's a necessary part of the broader modernization agenda. As part of that, again, liberalization and change of model around payments, we see an amazing opportunity for new players to come in because no single entity can service the full value chain without any hiccups. So as much as we're comfortable with the portfolio of services and products that we have and we want to expand those, we do welcome the opportunity for other players to come in when it comes to especially payments. As long as they're able to bring prices down, they are able to ease cross-border flows. But that too comes with risks. We are concerned and we are, I think, trusting our regulatory environment to look out for entities that may not have appropriate risk infrastructure. When you have to handle anyone's monies or funds, you have to have appropriate mechanisms and infrastructure in the background. It's not just about creating an opportunity or a channel for flows. And we would caution the public that when you want to switch to new service providers, please do your homework and do inquire from whoever your bankers are, from regulators, and just be comfortable that you do due diligence, because not everyone who advertises on social media or advertises on newspapers is appropriately licensed and appropriately regulated. And we would specifically caution around this excitement that, as much as cross-border flows may be moving slightly slower, perhaps perception-wise, someone else is saying they can actually move it for us quickly within a day. Just check who you're giving your money to and make sure that they're appropriately regulated and appropriately trusted. And I think there's generic use. We've seen in conversations with some of our stakeholders that we have more and more people that are calling themselves a bank. A bank has to be appropriately licensed. Do ask a question. Where is your license from the Central Bank of Eswatini when you operate within this environment? So it's just to raise caution that we've had incidences in this country where public funds have require explanation around usage. Let's minimize those by being asking the right questions and asking the difficult questions. And I hope the media would play an important role there. We are worried about the emergence of cybersecurity threats. Now, as I said something around globalization and the progression of technology. With everything that shows progress, there's also, again, risks. One of the things that concerns us is that with cybercrime, crime has an opportunity to actually do more damage through a single event. So the single event risk has actually shot up. When before you could pinch a few thousand there or a few million there is an opportunity for those that want to abuse all of the good that we've gained to actually take a lot through a single event. So again, it's a statement of caution from ourselves. We are on the lookout. We are constantly monitoring our systems, and we're very comfortable around what we are able to do to protect our own systems. But we're asking customers to please also engage the right experts and expertise to make sure that you don't have vulnerability on your own end. I know when these things happen, the default conversation is that the bank has lost money. But I can't think of an incident where our platforms or our systems lost money. But the vulnerability tends to be on the client end. And where we need to engage, where we need to consult and point you to the right people that can look at your platforms, please, let's have the conversation. Data privacy risks, I think in the last couple of years have been quite pronounced, especially for Eswatini. I have to speak to this with some caution in the presence of the media. We understand the right and obligation to report on malpractice, right? And we are not going to interfere. But for us as a bank, we've been very guarded to make sure that whatever leaks to the public is not, one, coming from FNB, two, that the privacy of our customers is protected at all times. Where there is risk or indication that any of our employees might be caught up in this romantic view that showing data to unauthorized parties is exciting and might create a story, we deal with it quite decisively. This is an issue. It doesn't take away, by the way, the responsibility of the media and any other parties or regulators to manage what they have to manage, but nothing in what we do should risk innocent citizens and people who transact honestly. So there's a balance a game that we are playing there. We were very concerned about unemployment trends. I mentioned positive GDP growth. It is not one that we necessarily can take to heart without question, until such time that your neighbor and your neighbor's neighbor, or the guy you went to school with, and his kids have a job. We should never be okay that GDP is positive. We're happy, but there has to be that GDP growth, that economic growth needs to feed into what people experience on a day-to-day basis. We all have a collective responsibility to create jobs and have engaged policymakers, by the way, to say, how do we create a coordinated and coordinated effort to encourage employment, even as when technology is playing a bigger role in our businesses. So as FNB, there is a decisive stance that we've taken that technology should not necessarily replace jobs. We want to leverage technology, but we also want to create jobs. It shouldn't be one or the other. There must be a path we can play there. And we have challenged our regulators to say, and our policymakers to say, can we not have a national position that just encourages companies to hire where they can and not use technology to replace headcount? Because there is a social reality that we cannot ignore. You don't want to succeed in a desert or in a setting of isolated success. Success has to be much more broadly spread for your own success to be sustainable. And just to flip on to the next slide, what that meant is that for the first time in our history, as Zetu and Hlengo have said, we're no longer reporting numbers that are, or results that are showing just the international shareholding piece. We do have 24.99% of the business that is owned by Yemaswati through various schemes. It's a critical development and it fits into our shared prosperity model. And we are still quite happy that, quite chuffed that we've got employees owning 4.99% of the bank. And I will make an open invite to the entities that are showing there that we do think there is an opportunity for us to collaborate a lot more closely in terms of solving for our membership. If you can look at who sits in the membership of the PSPF, who sits in the membership of the Provident Fund or Mutual, Sibaya, SNAT, there is a lot of value sitting there. And we do want to find a way of collaborating a lot more effectively. Now, significant to this is that when the new entities joined the first Rand family, I think within 3 months, was it 4 months, Jabulo, they got a dividend. And I don't know if they've invested in anything before where they got a dividend that quickly. And it was 84 million Emalangeni in total. And today, what with the CFO's permission and perhaps with the company secretary, is that Mjabula is motivated with the board, and we don't think the 84 million that we paid in April was enough. I think Mjabula wants to pay more. So to our members, the dividend that we paid of 84 million was for the first 6 months, July to December. We're looking to pay more, a slightly higher figure for the second half of the year. So we do have the figure. We do have regulatory approval for it. I'm just cautious to respect Hlengiwe not to say the exact number, but it will be more than the 84 million. We are aware the stock, and I'm hoping management sitting here can go back to their boards to say the decisions that you made, you can take credit. The decisions that you made is paying dividends in the literal sense. It has been a very active 2024 financial year. In addition to the listing, we've grown the business quite significantly, setting new benchmarks, some of which we're going to show. It is important in a country our size that we show double-digit customer growth, and we've shown this every year for the last 5 years, where we've been growing customers somewhere between 10 and 15% consistently. So whatever, however we may read the business, there are very strong metrics that says the brand and what it offers to the public is still very strong. We've shown positive growth along through a lot of our product houses. We've expanded footprint in response to the customer growth, by the way. Matsapa Lifestyle, you would have seen the Butleni agents we've added. And we are looking at having micro representation right around the country to, again, minimize the time that people take to access our services and to push this migration, digital migration effort. We've done a lot of work to deploy new self-service technology, coin counters and banknote counters, SIBO, in all of our outlets, and are looking to do more. And yes, during the year, we moved into this new campus, and then we'll talk to the changes in the later on our landscape. In spite all of this, one of the things that we've been asked and encouraged by our board and not to ever forget is that, linked to what I said earlier around, make sure you do not prosper alone. Whatever we make, there's a portion of our profits that is dedicated to strictly social impact investment. And as part of our a shared prosperity model. And we've done quite a bit this year. We wish we could actually have done more. If you can flip to the next slide. We've spent just nearly 3 million in entrepreneurship through the bank and FNB Foundation. We've done a lot under sports development. just over 2 million a day. In fact, this year, this figure is almost double in the next numbers that we're going to report. We've done a lot around gender diversity and inclusion, and I think we've spoken quite openly in terms of supporting gender-based, anti-gender-based violence programs, which unfortunately this country needs, and unfortunately being a key word there. And then around education support, there's been about 1.5 million that has gone there. And I think for the first time, we're starting to have conversations around how can we support the climate change conversation or discussion. And there's a lot more we can do going forward there. And then health, arts, and other has been that much. When we present next year's numbers, I think Jabulo, all of these figures will be much higher. So we aren't just a bank to extract value out of our business. Part of the value that we extract, we have an obligation to give back, not just through dividends, but through a social dividend as well.
You've been doing Forex for a week, I think now. Mane Sizu was explaining, sort of glossed over the credit card issue. I thought she glossed it over. The issue is on the whatever she had put there. She said you will continue to pay. There's a way we were paying a week ago. She then said people had been told that they will continue to pay. I don't think that's the impression I have in my mind, but I need clarity. Are we going to continue paying the way we were paying a week ago, or we're also going into the Forex thing? Because that's the impression I have, that credit cards change too in the manner of payment. Secondly, I'd like to know how this Forex thing is going in the week, because I also needed, particularly at a business level, and I sat down with my instructions and you published in the newspaper and followed them. And there was one glitch. In the area where it says, and then load global payments, that option wasn't there under Ed. It wasn't there. I phoned Matapa, I spoke to the lady, she tried to consult, she came back, fortunately, I know someone in the bank who understands it. Click here, click here, click here, but that's me. How many people don't find that? Now see Ed, global payments. 2, if you sign in 2 on a business account, I'm the administrator. So I load this thing, and then I tell my other person who probably is at Lavumesa doing the Wendago. I call it the app. The app doesn't load for the app learner for signing, for counter signing. So I phoned my cousin who's at the bank and I say, "My saying, no, you have to have a laptop or a computer. It's not loaded on apps on the phone." One, we have to do this between 8 and 3:30. So we are being there's someone I have to go and pay. And message so this is creating a new problem, and I'm just wondering, are you guys and why is this thing not available on the phone as normal? Because the normal transactions local, if you